Alright, I guess it's time. Welcome everyone to our midweek review. And well, basically Big Ten trading session. So the London Open is typically, or this London Open live session is typically conducted 15 minutes before the open of the London market and 30 minutes after the open of London. Hopefully during that time we will be able to jump into the market or at least provide clear guidelines on what we should be doing. Now folks, let's review the market a bit. Let me drag another platform. And what do we see? For today, we actually have the dollar on the defensive. Okay, it's been going on actually since yesterday, but that's after the big gains that we saw from profit taking last Friday and then on Monday. What else do we know? Overall, if you look at your equity markets, things appear to have stabilized a bit. We don't have that sharp drop that we saw from late last week. Okay. Of course, those sharp drops were a response by the market to the tariff that was imposed by President Trump. What else should we be aware of? I'm looking at our precious metals, and we've got some interesting setups going on there. And yeah, as we said, for today, the dollar is in the defensive. Look at your futures contracts for the dollar index dropping. Now, before we go into details of the charts on what we can trade, let's look at what do we have for today as far as the calendar is concerned. Is there anything important that we should be aware of? Well, let me see, guys. So here's our Wednesday calendar. And is there anything that one would consider to be very critical for the market? Not really, okay? Unless you trade energy stocks or energy futures, we don't have anything very critical ahead of us. I guess the key data points will still be tomorrow, when we will be seeing inflation out of the US. Now, take note, I know that over the past couple of days, we've all been hearing about how inflation is likely to have ticked up given the inflationary effects of the tariff that President Trump has imposed. I would like to point out, guys, that those tariffs will, okay, actually those tariffs will start today, April 9th, as far as I can remember. And if those tariffs are indeed going to be implemented by the US today, starting today, April 9, that the impact of that to the end consumer would take about a few weeks. So we would expect that the numbers will, or rather the tariff, will have an impact on those inflation numbers, not in tomorrow's release, but with the release for May, especially on June. If indeed the tariffs will, if indeed the tariffs push through. Okay, so there's nothing in the calendar, so that means that as far as our trading day is concerned, I will be focusing mostly on what the charts are telling me. Now, as you know, our live trading session is really tied to us trading a prop firm account. So we will be looking at euro, which is really the thing that I like trading. And let's see if we can find something to trade in euro. Now we are about 10 minutes away from the Open of London. What do I have if I look at the euro chart? If I look at the daily, if I look at the daily charts, I actually don't like what I'm seeing. We already have price action happening. Okay, we've had our euro rising. Okay, since midday in Europe, or rather since midday in Asia. We've had it with a sharp after-market rally during the Sydney Open, during the Sydney session, during the Tokyo Open. So, what does that give me? At this point, it makes me hesitant to just jump into this. Okay, so yeah, hesitant to just jump into this euro trade at this point. But what do we see? Let's review our charts. If you look at our euro, let me go big picture. You will find that we've had that, let me go dailies here. So we've had that Trump-induced spike up from last week. By the way, the period separator for this chart is on a monthly scale. Let me zoom out a bit. And what do we have if we look at our charts? If you look at our charts, we have some pretty strong resistances in our euro only when we get to that 1.12 area, okay, around 12.10, 12.16. So are we near that level? Not really. So far from that. So what am I saying? I'm saying far from key resistances. If we're thinking about taking trades that would last for a couple of days, our objective would be to try to get to this level. All right. So are we saying you should be buying now? Well, guys, remember that this session or Big Ben trading is about intraday trading. It's about trying to jump in when there are a lot more people active in the market, trying to jump in when liquidity begins to pick up. Why do we want to jump in only during the European session? Well, if you trade currencies, basically about 40% of all the trading that happens in London as far as currencies go. So at this point, I really prefer jumping in only when I've got the mass of traders behind me, when I can expect that there's liquidity, there's volume behind the PA. Okay, so yes, we've established that in a few minutes we will have volume starting to come in. The next question for us is, are we in a position to actually do something? And I think that's one of my problems right now, because if I look at our chart, if I look at my dailies, I see that I've got the high for the day at 1089, low is at 0947. So we've basically had 130 pips of price action, meaning we've had a big move already. So if it had a big move, I typically would hesitate about trying to catch the last stages of Let me just fix this. Let me just do that later. So, where was I? So my concern at this point is, we've had that move already in euro, that jumping in right now might not be the best idea. If you talk about average ranges, we've had 130 pips of price action. If I put an ATR in our chart, that ATR tells me that the average daily range is about, okay, this is the orange chart. Average daily range is around 116 pips. So we've basically hit average daily ranges in euro that trying to join the buy side now may not be such a good idea. We may be too late. Don't get me wrong, I still want to join the buy side, but now is not the time for it. In fact, given that we've seen average daily ranges, given that we are nearing some, I would say, moderate resistances from this high here and around, it's about 111.08, and then we have these highs here. So given the proximity to these resistances, these previous highs, I think the more immediate trade that could be available for me would be to see if market will just consolidate. Remember folks, 60% of the time, markets are just playing a ranging game. Markets are just consolidating. So instead of me thinking there's this intraday trend that I'd like to jump in, I go big picture. And my big picture says there is this box here. There is this consolidation from the last few days. Now, maybe within that consolidation, okay, let me just pick up a pen. Let me change this. Alright, guys. Give me a sec, folks. I'm having trouble. Okay. Looks like Epic Pen is not cooperating at this point. Yeah, it's so epic of Epic Pen. Okay, for some reason I'm not getting the Epic Pen. Okay, so without Epic Pen, let me just try using our built-in stuff here. So typically markets will consolidate. 60% of the time, markets are playing a ranging game. Now, given proximity to resistances, okay, here are resistances. This one here around 1802, and then this other resistance around 1134, around 1108 and 1134. So given proximity to those resistances, my preference at this point is not to try and catch that last move, if there is, in our euro towards these resistances, but rather I want some telltale signals right now that says, hey, you know what, 1108 and 1134 is a you know that there's no big catalyst for the market to get out, to break its current market structure. By the way, London markets are open now. So current market structure following your Trump-induced breakout before is now saying a consolidation is a trading range has developed. The trading range is from the 109 area all the way up to the 1134, 111 hundredths level. So we want to play that range game. If we look at our chart, we are nearing the resistances of that range game. If we look at our candlesticks, what are we seeing? We are seeing telltale signals of a weakening momentum. You actually had a bearish reversal here, although no sell-off has occurred yet, but that is still a hanging man. You have the previous hourly candle doesn't really signal anything. Okay, you've got long wicks, long tails, basically small, not that small of a body, but again, let me zoom in. If you look at your candle from the previous hour, that long wick and the long tail and the almost similar sized body tells you that there's not much congruence, there's not much agreement that this is still going to go up. A lot of people are now thinking, hey, it's gone up by quite a lot since the US session yesterday. So I mean, what I'm saying is you've lost momentum as far as this rally is concerned, but we do not have anything that says sell your euro now. Typically, London session, I prefer doing breakout trading, but since I've had my breakout earlier, what I'd like to see now is something that says that breakout from earlier, the rally from that breakout earlier is through. I want to see something that says that's done, expect your market to go down already. So for now, I am not taking any action in euro. In case, if later on, say at the end of this current hour, at the end of the opening hour in London, I end up with a candlestick that looks like, okay, that's not whether that works. If later on I end up with a candlestick that looks like this, basically a shooting star, okay, a long wick and then a small body, then at that point, perhaps at the end of the hour later, I will jump short if given that kind of candle. Okay, can I jump short now? Well, folks, we are trading in an evaluation account for a prop firm challenge, so you don't, under these circumstances, you don't want to just take action because you're itching to be in the market. Okay, you always have to think about having the best conditions before you jump in, before you take action. And the best conditions would be have a signal that says my expectations of that consolidation continuing is already happening, is already there. I am seeing signals that says this is a bear market. So here's something that we would like to see later. Let me show you. If we were to get something like this, if we were to get something like this candle here, okay, if we were to get something like this again, then at that point I can say short your euro. Without such a candle, would I be willing to sell? Well, another potential excuse or reason for me to sell your euro would be if I have a big bearish candle, something like this, and a bearish engulfing candle. Okay, so the body of the previous of your previous candle is inside the body of a bearish candle. If I have something like that develop here, then yeah, why not? I'd love to join the sell side. Any possibility of me jumping short earlier? Well, one technique, not the best, but if you really have to, would be to consider a break of the low for the previous hourly candle, knowing that we've already gone beyond average daily range, knowing that we are overbought in our stochastic indicator. So, all right, overbought in stochastic indicator, no definitive reversal signal. One strategy that I can use would be, okay, I'll tell myself, okay, we know that this is the London session. We know that momentum typically develops in the London session. It's very rare for the London market to just consolidate. We also know that there's no big reason for Euro to get out of that trading range from the 109 to 111 area. So given the combination of that reasoning, one option that I have is, okay, if that's the case, I will be willing to sell without any clear reversal signal. If I have a nice drop in the latest hourly candle, one that takes me through the low of the previous. So we're not going to short right now. There's no imperative that tells me it's a good idea for me to just short that Euro at the moment. Okay, so no immediate price action, or rather no immediate trade for us, but preferred situation would be if I get, let me just try something, folks, because I really am not comfortable without a pen. I don't know where that pen, okay. It seems that I really can't open the pen. So we're not comfortable taking any action at the moment. If I were to see a closed candle, a closed shooting star would be like this. If I were to see something like this, given that I am near those resistances, then yeah, I'm willing to do something. I'm willing to take a sell. If I see this latest candle here closing below the low of this previous candle, that would be a bearish enough signal for me to also say, okay, your big picture range play is continuing, it's time to jump short. Other than that, without any signal, I'm not going to do anything. We're not going to chase whatever momentum is left, which I don't think there is, given your previous candle. We're not going to chase the buy side given proximity to your target. A common mistake among traders is if someone says they've already bought, and then they chase the guy. If their guru says that they're buying, and people will just go jump in and buy. That's a pretty common mistake. If you're very near the price target already, mathematically, it's not a good idea for you to take action, because you're talking about having a small upside potential. In this case, you're talking about an upside potential of about 30 pips. Okay? As against, what's the downside? You look at your consolidation. You look at where you look at the lows of that range play. The nearest support that I can find that I would think of as significant is this area here. basically the breakout point of this multiple bottom around 109.93. You're talking about 80 pips downside to a good support. So it doesn't make sense for you to target that potential 30 pip upside given the risk of an 80 pip downside. So I'm sorry to say there's no immediate trade in euro. Again, if we see a candle that looks like this later, yes, we can sell at that point. Absent that kind of candle, give us a bearish engulfing candle. Okay. Give us imagine that this thing here has an orange color. Give us an orange colored or a bearish candle that engulfs the previous candle here, and that could be an excuse for you to jump short. Outside those conditions, the better course of valor would be not to do anything. Not doing anything is also a trading decision. Okay. All right. So looks like we have nothing that we can do immediately in euro. Let's take a look at. Everybody's been looking at gold lately. So let's take a look at gold. Everybody is interested in gold. So let's take a look at gold. So symbol for gold is XAU/USD. Is there something that we can do in gold? Looks like gold is also moving. Okay, it's also moved during the Asian session. Now, what do we know about gold? We've come off by quite a lot from our historic highs. Okay, looking at this chart makes me think, can we do some Fibonacci's? I want to know how much of a pullback have we seen from gold since the Trump tariff announcements. 61.8 fib retracement level. You gotta love your fib retracement level. So guys, whenever you're trading and you find it difficult to find the support or to look for a support level for a pullback, always look at your Fibonacci's. See if the Fibonacci retracement level at 38.2, 50, and 61.8 has already been hit. Now, there are actually other Fibonacci levels, folks. Let me just show them to you. Okay, you've got 22.6, you've got 88.6 for retracement levels. I don't really look for those numbers. One thing with technical analysis is, technical analysis works when a lot of people believe it. It is self-reinforcing. The more people believe in a certain idea, the more likely that the function of that is going to happen. So I'm not into the esoteric approaches or applications of technical analysis where people will go for the derivative of your Fibonacci ratios. Just give me the first order of those Fibonacci ratios. I'm not going to look for the more exotic ones. 88, 23.6. I'm not going to do that. All right. So we've got gold pulling back already. We have it bouncing back up. Okay, so that's again a big question. Is there potential for this to move any higher? Now, unlike currencies, gold actually doesn't have that idea where there's a certain time where it is most active. Why is that? Well, for one, because gold is not a currency. It's the haven for when there's market turmoil. Gold is heavily traded across the world. Okay, it's heavily traded in Asia, in Hong Kong, Middle East. Okay, Dubai market's pretty big. London, and also New York. So what are we saying? Unlike currencies, where I tend to think that a majority of the price action happens usually, especially if you're talking euro, a majority of the price action happens when the European markets open. Gold could move big at any time. Okay, we've established that. What can we do now for gold? If you look at your daily chart, your pullback saw 61.83 retracement. You tried to rally yesterday, didn't have enough buyers out there. You ended up with a shooting star. In fact, I would say almost a gravestone doji. What else do we know? We are coming off your oversold levels in stochastic. Combine that with the idea of a support holding, and yeah, that sounds to me like it's ready to make a stab at the historic highs. So the question now, okay, we've established that we've got a nice support in gold. We should be thinking about gold picking up again, maybe heading to your historic highs at $3,167. Is the timing right for us to do something? Let's go intraday. We are overbought in, okay, this is very interesting, guys. So we're overbought in our stochastic. We triggered a bullish continuation pattern in our hourly charts for gold. What else do we know about gold? We are in the process of clearing this resistance area. Okay, that resistance area basically around 38.25, but let's not look at it from the perspective of Fibonacci's because those are retracements. Let's look at it from the perspective of these highs from Monday. So we need to get through this consolidation highs from Monday. We need a solid close above it to think that this is one of those days where gold will overshoot its usual daily range. So guys, we cannot just buy at the moment because your previous hourly candle failed to take out the consolidation highs from before. We are seeing an attempt to take out those highs. So do we buy now? Again, safer course of action would be not to take any immediate action, but close the hour with a nice solid body, close the hour with a very small wick in gold, and we will say that, okay, your attempt at breaking through Monday's highs is successful. You're going to see a follow-through rally towards the 3167 area. Immediate target, of course, it would be this area here. Okay, this lows, that's about 3078. Eventually, you'd be looking for a retest of historic highs. But again, do not take action just yet. You don't have a definitive close from the previous hour. This could turn out into a doji. In fact, I would say if at the end of the hour, I find myself with a shooting star or a high wave doji, okay, if I find anything, okay, let me just show you. If I'm given these types of candles, okay, gravestone doji, shooting star, okay, this would be a Again, this not the best example, but this is a shooting star. So if I end up with those kinds of candles here at the end of the R, then yes, I'd be willing to sell it. So just like in euro, we're not in a very good place at the moment to take action. Unlike in euro, where I really do not like the upside, here you've got plenty of room to maneuver. It's just a question of, do you have enough buyers to continue your rally from earlier? Can we confirm the strength of that buying interest by closing above the highs from Monday, or from this consolidation, by closing above your 3044 area? Give me a solid looking close in our hourly candle. It is unfortunate that we closed, this was a very nice bullish candle in the previous hour, but because of proximity to a resistance, that was not a good place to jump in and buy into. The good place to jump in and buy into would be after you have gone through your previous highs. So again, something to remember here. When you're approaching a resistance level, no matter how much upside potential there is, do not jump in immediately. Wait for a clear push, a close above that resistance, something that says that resistance of yours, those previous highs, are no longer significant. We have overcome it. The market has overcome it. You look for that argument before you think about buying further. If that argument is not forthcoming, if this candle at the end of the R becomes, as we said, gravestone doji or a shooting star, then at that point I can argue, okay, you don't have enough buyers out there. Your smaller consolidation from Monday. Remember, if you look at your chart, you've been playing a range game in gold from about 2960 to your 3039 area. So fail to take out those resistances. Give me a nice excuse to jump short, and yeah, we will be willing to take the sell side. Again, we don't expect anything new as far as an external variable, an external catalyst is concerned, that is going to move our gold chart. So there's no argument for me to take any immediate action. Yes, when you talk about gold, you talk about your currencies. Typically, the London session will give you a nice will give you momentum, but we're not there at this point. Okay, so again, unfortunately for us, there's no immediate action that we could take in our euro, in our gold chart. At this point, given the extent of the move in euro already, I am now thinking, okay, this is likely to hold. Just give me an excuse to jump short. Just get that overbought stochastic to come off that 80 area, along with a nice bearish candle here, and I will be jumping short at that point. I'd be looking for this to just test or at least try to get to the previous lows. Just play the range game. So no immediate action for us, guys. It looks like I may actually have that engulfing candle at the close of the hour, and if I do, then yes, I'd be willing to jump short. If you're not in a position to watch your chart, to watch the market, would it be a good idea for you to just place a sell stop below the low of this indecisive candle? Again, given the time, given that it's the open of the London market, I would say yes. Okay, we should be able to do that. In fact, let me just make sure that I'm in the prop account. Let me just switch this to gold. Looks like gold's losing momentum, folks. So if I cannot wait, I cannot monitor the market, then what I can do is I can just place a sell stop. I'll place it around 103.78. Okay, let me just modify our lot size. Now again, because we are using a prop account, there are rules that I have to follow. And one of those rules is the consistency rule. Consistency rule for me is 20%, so I shouldn't have any profit that is more than 20% of the challenge target. So I'll limit myself to this area. I'll place my TP around here in case that sell stop gets triggered. Stop losses, ideally the stop loss should be here, folks, right above the high of the previous candle. So for now, we are not taking any immediate action. We have a sell stop. Hopefully that sell stop gets triggered, and once that's triggered, I get a nice sell-off going. We are, after all, overbought already in our hourly stochastic. We don't seem to have momentum for the upside anymore in our euro breakout. So nothing for the moment, folks. I guess this is a waiting game for me. I am definitely not joining the buy side because I find myself around the highs of previous trading days. We find ourselves with a significant price action already. Average daily range is about, let me see that again. Average daily range is about 116 pips, and we've had around 140, almost around 140 pips of price action already today. So we are not in the best position to try to chase the buy side. We would like to get a rejection from the highs of that consolidation. If we cannot wait, we cannot monitor, we don't have the time, we can just use what's called a sell stop and look for market for momentum, for bears to eventually come in and take this through our sell stop level. Take the market through the low of the previous hourly candle. You know, the best place to actually, or the best time to actually place that sell stop would be when you're near the close of the R. But if you can't have that, if you can't, if you can't wait for that, then that's the best option for you. Use what we call sell stops or buy stops. By the way, if you're using a C-Trader platform, it also has what's called a sell stop limit. Basically, a sell stop limit allows you to define just how far, or allows you to define how much of a slippage you are willing to accept. So folks, thank you for joining this session. Unfortunately, we don't have anything going right now. We placed our sell stop. We're hoping that that sell stop gets triggered, give us a bit of a sell-off. If you're trading a normal account, I would say try to see if you can, if prices go back to this area here around the 109.93 region, 109.90, this consolidation highs here. Maybe you can do partial profit when you hit that level, and then see if it goes all the way back down to the 109.00 level. But as we said, that's if you're trading your own account. You're not doing prop accounts. You're not doing accounts that has rules with regard to consistency. Anyway, thank you for joining, guys, and I hope to see you on Friday. Thanks for